Okay, everybody. Okay. I'm on, but let me... Okay, 1 second. Okay, that was me. I know you see Ryan Cohen peeking in the corner there. That's on purpose. Just he's not that evil, you guys. Come on. Okay, so let me put this thing here so we could see people talking smack on GameStop. Who knows? You know, who's here, who's not. We'll see. Alright guys, so this is it. Buy now, pay later. Okay, no, just kidding. I don't know. Do what you want. But this is GameStop. I know I watched Moran's earlier while I was at work. Always a treat to see him up there on live while we're working and making the dough. Now let's yes, so let's go through the price here. Of course, you saw the price action the last few days. It's been crazy. I don't understand how the price is so low right now, right? But hey, you know, it is what it is. It's a day in the life of investing in GameStop. Hi Lionel, thank you for joining. So what I was looking at, of course, this is my favorite indicator, you guys. Like, you've got to see this indicator. And I'm sure, you know, I've brought it up many a time, but nobody really giving me a little, like, more explanation on how that works. So, not quite sure how that works either. Now, if you look at the volume that comes out of this cell right here, the price movement move much quicker than the actual volume itself, right? So how that would pan out is right here. So you see, like, before the run, the volume is really low down here, and the share back then, it was what, 5.8 billion shares, 5.8 billion shares, right there. But come to here, you see 5.9 billion shares. So that means, what is that? That's 100 million shares being traded from here to here. The difference between 100 million shares. But how come the price is not like coincide with that? Now usually that's called a diversion, right? Like, meaning some anomalies is happening. That perhaps, I'm just saying, in my own analysis here, that there's going to be a run coming, right, on the opposite direction. So if the price drop while the on-balance volume ticking up, that usually means it's bullish, right? Hey, just my opinion, right? Now there are people who are thinking that, and I'm kind of like the same way, the way that I think about the price action here. Again, this is just a psychological thing that they do to, you know, to make you feel some sort of a way, like feel stupid to own this stock for some reason, right? Or why don't you just sell now and be done with it, right? Why don't just Ryan Cohen give up on the company? Just die already, right? Just go bankrupt and file for bankruptcy already. Why try? Like, this is the sentiment of people who try to, again, not understanding what this company is trying to do. And of course, like the impatient. Look, I have that energy too. I'm not saying that I'm like very happy to see the price drop, but yet, like, my long-term thinking that part of me saying like, hey, this is a good price to buy in. Okay, I have to wait another couple of years instead of 1 year to kind of reap the benefit here. Now, again, I'm talking from the price point here. That the current price point is going to perhaps drop down to $9 here. So just prepare for that. Just like I said in Moran's live stream, which shout out to him too, always supporting my channel on his live stream. So very happy for that. But also to kind of prepare for the worst, right? Hope for the best. And if it's prepare for the $9 and hope for a $9,000 a share. So that's all you could do, because who knows how low that they are going to be able to drop it down to. Currently, the volume is coming down again, running dry again, right? We used to see within the last couple of the earnings week, it's usually the volume kind of kicks in like that, where you see the price spike or the anticipation of a good earnings, which we did have a good earnings. Don't get me wrong. Of course, they want you to think that we're missing whatever. In actuality, we didn't miss anything, right? But whatever. You could see, look at that. The volume coming from 10 million shares down to now 1.7 million shares being traded. And of course, like with that, they have to short 1 million shares on top of that. So there's no really price discovery in this thing at all, right? And then they want you to believe that people are selling left and right. Oh, it's over now, right? It's a nail in the coffin, or it's whatever. And then you have Tony De Niro coming in and kind of promoting AMC along with it as well. But anyway, I love it. Lower the better, the more for you and me. Yes. Be more. I got my price target 10. Yeah, I mean 10. You might see your price target, Leno. So, I'm not knocking that at all. So, kudos to you for finding GME at $10. So, yeah. But people have been holding. I've been buying it since $60, and price what is it called? Dollar cost averaging down, and gonna add some more even throughout the years. And again, if they're able to keep it at a flat level, like well, traditionally or historically, if you look at the back, historically. Meaning the price before the run, right? When people are jumping into this company. This is a what is it called? A fair value, right? At the moment. Because back then, when you look at the balance sheets itself, right there, right? You don't get the same profit margin. So if you think that, this is at the height of the price action right here, 2013, right? So if you look at the November 2013 right there, let's see what the balance sheet tells you then, because I'm curious myself, like compared to 2013 to now, what is the balance sheets kind of tell us? Okay, so let's go there. Let's do trailing 12. Oh, it might not even go that far, huh? Yeah. So 2014 right there. Okay, so let's move 2014. So this is the high, right? And let's say what was last time it was like that price as well. Hold on. That's $14. Currently it's $11. So this is the resistance right here. So the last time it was 2015. Okay. So right here, 2015 November 3rd. So that's around fourth quarter, no? Or third quarter. So let's go back to see 2015, right? Right there. So this is an annual balance sheet right there. $9.3 billion in sale, right? Compared to right now, very, very low. I get it. I admit, hey, we're cutting down the footprint here, okay? Back then, in 2015, we were able to bring in $600 million. Income-wise, only $400 million. Can we achieve that again? I think we can. Might take a little bit more time, but it's okay. As far as the interest payment at the time, we only paid, $23. $23 million at the time, right? And ever since then, we were loading on debt, okay? This is the company. I'm not talking about Ryan Cohen here. I'm talking about the past, okay? In the past. Because that's what people measuring GameStop at, right? Of course, top line revenue is the whole, thesis that these people have about GameStop, that they're, shrinking, they're dying and all that stuff. Again, very, very, gut punching terms so that you're not looking into this company saying that it's a terrible company to own. Okay. Well, let's look at it a little bit further here. When you look at the history of this company, the reason why they're able to pull in this much, right? Think about how many years of that is happening where the interest is so low. The environment in which, you could get free money from businesses and all that stuff, they're able to leverage and go crazy, right? When you're leveraging at an environment that in a booming economy, of course you're going to be able to, service your debt, right here, in order to pull into, the cash on hand to, buy more goods and services and provide more goods and services to people who wants those items because the demand is there, right? Fast forward to right now. Do you think you have that demand that is happening right now? And in today's economy, you don't, and that's why it's imperative to lower, to pay off debt, and which we did 3 years ago when people were up in arms about how we're not supposed to do that. We're supposed to expand and all that stuff, right? No, BS. We don't have to. And on top of that, we don't need to be paying these interests that was accrued by those senior notes and stuff like that. So, and that would have been dampened even more on the bottom line of the company, right? And so my point is that when you're having a booming economy, yes, borrow money, leverage it out in order to make $400 million, right? So you sell $9 million, but you only pull in $400 million, right? But if you look at today's price point right here, right? You sell this much, you pull in this much, but they're fixing the balance right now, right? So if you look at the yesteryear, the year before that, it's like what? Right there. So it's nothing new here. Like, for people who invest in this company for the duration of where Ryan Cohen got in, they know this. And Keith Gill knows this particular balance sheet much more than even Ryan Cohen at the time. Because Keith Gill, Rowan Kitty got in before Ryan Cohen even got in. So this is the type of analysis that people are doing. Yes, me getting into it at AMC at the time, I didn't look at the balance sheets, and that's why I got roped into AMC. Thank goodness I make money from that, and sell at a time where it would have been mattered at the time that it mattered to me. In turns, I save a lot of money not buying into AMC. Right? Of course, like, people would love to think that AMC is the same as GME. Like, if you, at this point in your life, you still think that AMC is the same as GME, I don't know what to tell you, right? Like, you have Morans have been shouting through the rooftop, 3 years of how AMC is so damaging to retail. And people, again, still like Tony De Niro and everybody who's trying to get you to still believe in AMC, how the squeeze and all that stuff. No. There's no squeeze there. You know why? Because there's no catalyst for it. And even if there's a catalyst for it, you know what happened? Adam Aaron's going to be there to ensure that it's not going to ever happen, right? So, and I think I make a video about that too, like a year ago about that, when they were issuing apes and all of the, the dilution, conversions and all that stuff after it. And now more dilution, right? And people are still promoting just like bigums and all that, to try to, again, impede the progress of what GameStop is trying to do. But of course, like, you can't stop GameStop because, again, one of those things where people are going to become more, like, realizing, it's like, oh, what? GameStop makes how much, huh? $100 million last quarter? What, huh? I thought they're dying. But again, by that time, I feel like we probably have more cash on hand before people are like, what? How much? It's like, GameStop has what? $5 billion in cash? Again, I'm thinking like, 10 years from now, people are like, what? GameStop? I thought it's dead already. It's like, yeah, okay, well, it's not. And people have been accumulating GameStop for a long time. And again, this is the power of long-term investment mindset. And this is what Warren Buffett has been doing. Like, if he knows about the company that he's buying into, and anytime when retail or whoever want to trade this company thinking that it's only $11 or worth $11 because of the negative sentiment of what they heard of whoever's telling them to sell, whatever, right? He's like, yeah, more shares for me, like Lionel is saying, right? But again, like that's the mindset that you have to have. But also too, how long can you endure this, treacherous road of people bashing you all the time, saying you're dumb, you're stupid for buying a company that is doing well? Like, can you imagine that? Okay, a company that's doing well. Well, based on my point of view anyway. Hey, Manuel, what's up? But anyway, so that's just my point of view of the whole, narrative here. Now, as far as cash on hand, that is the important factor in kind of like evaluating this company, in my opinion anyway. Because that's such a anchor for the company to flex later on, right? When it matters. I think I make an analogy before. I forgot if I did it already. Like maybe most recently, I don't know. But I'm gonna make that analogy again because it's important to get to have like a perspective that you should be having when it comes to thinking about the long-term aspect of things, right? And the fact that Ryan Cohen paid off debt right away, that speaks volume. That people don't really understand that. It's like, why would you want to over-leverage yourself in this environment when, the Fed is trying to tell you, hey, we're not lowering the rate right now, right? And I bet you anything, Ryan Cohen anticipate this moment in time right here, right? 3 years ago, he did it. And people are not understanding it because every single businessman out there who are, running this company, they've been running the company based on a low interest rate for like 3 decades already. And so when the high interest rate comes along, they don't know how to operate a profitable company, right? Because again, they were high and mighty because of debt. And this is why we have freaking $34 trillion in debt. For what? Like, what do we have from that? Nothing at all. And working class are struggling because of this. People who don't own any asset are struggling because of this. And then people are not understanding what's going on with the business world and how to run it in a high interest environment, right? And it takes Ryan Cohen to be here to say, hey, if the company doesn't make money, the executive do not deserve to pay, to eat, right? Because you have been eating for a long time. So if you're incompetent enough to run a freaking company, that is losing money, and you still, getting paid what billion and gazillions of dollars on your salary or stock compensation, then you don't deserve to get paid, right? Until you're running a better business, more effective, more whatever. But that's the stand that this man is trying to, get America to at least take a look at. But yet, every single outlet out there is trying to tell you that this guy is a failure. It's like, really? Do you not know the difference between a good person, a good businessman, a good, a good-hearted person, or at least a CEO that's like, okay, he could be ruthless too, but I think he's more ethical than any other businessman out there, right? In my opinion, right? He could change. I don't know. Elon Musk, I feel like throughout the years, he's been changing ever since ever since Tesla become the behemoth that it is. So maybe, at some point Ryan Cohen's going to be evil, but he had not demonstrated that to me yet. So, but that's remained to be seen, right? I mean, the fact that he have $3 billion right now, he could just retire and not even doing anything, right? And so he's taking this on for a reason. Perhaps he's trying to make a statement. Perhaps he's trying to build a legacy that lasts for decades on end. This is his name. This is his identity. So there you go. Again, hey, just me. But anyway, let's go back to, operating a business on this high interest rate environment, right? Now, I just watched something, not today, is it today or 2 days ago? It was a interest, what is it, not interest? Labor costs. So, fast food restaurant, instead of, operating, was it a chain or something? Here, let me see if I could find it. I should have, let me see. Not that one. I was watching this guy he's a trader. So if you want to kind of watch the TA and all that stuff, this is the guy to go to. And now this is a trader, okay? He's trading in and out of stocks and stocks, buys, or whatever. So call option, whatever. If you want to learn to do that, you could do that yourself there. I would navigate it because, again, hey, it's stressful to do that for me. But anyway, so let's go back to fast food. San Diego. Don't think that. Let me see. There was a news. $20. Restaurant closed or something. Is it windy? I feel like Windfest. Maybe I am not doing this well. Okay, so somewhere they were closing down. they're cutting hours and all that stuff too. So, businesses, they have to do this in order to survive, right? Hold on one second. All right, so let's see. Okay, so let's listen to this one. This one is 2 minutes.
Fast food workers are about to get a pay raise. Next week, the minimum wage goes up from $16 an hour to $20 an hour. But the restaurant operators say a higher wage could mean fewer workers. Here's NBC's Robert Honda.
I sent it to you. Okay.
Amir Samadi runs a popular round-table pizza shop in San Jose near the Oak Ridge Shopping Center. He considers himself a good employer through good times and bad. For example, Amir points out he did not lay off any workers during the pandemic or cut their hours. But now, as California gets ready to up the minimum wage for fast food workers from $16 to $20, Amir is not sure if he can afford that change.
As an owner or as an employer, you have to have coverage to pay them. If you cannot, you have to shut your door. Or they're going to lose the hours. Anyway, it's going to be lose for both sides, either employer or employee.
Some have suggested the wage hike could be covered by raising prices, but Amir says passing the cost to customers is not as simple as it might sound.
You cannot just out of nowhere change the prices so people are going to go elsewhere. There's a lot of options out there.
The new minimum wage applies only to designated fast food employees who work for places that sell food and drinks for immediate consumption, and applies to the bigger chains with at least 60 establishments nationwide. The South Bay Labor Council and many other labor organizations supported the change, calling it a job creator, not a job killer.
I think the data tells us that small businesses in particular save money by investing in their employees. You have to do less spending on training, less spending on advertising, and when someone just has one job, they're more focused on that job.
Some fast food workers we talked to, who asked not to appear on camera, say they worry about the impact on their employer, but also say they need the money to keep up with the Bay Area's cost of living. Customers we talked to at the roundtable say they sympathize with all sides, employers, employees, and customers.
Everywhere, everything's getting higher, so people need to make more money for that, and rent's getting higher, so it's understandable from both perspectives.
Yeah, because if the stores or shops raise their prices, you might not go out as much, right?
Exactly.
The new law also establishes a fast food council, which will monitor the change and see if there should be any more increases in the future. In San Jose, Robert Honda, NBC Bay Area News.
Anyway, so how can you expand in this environment, right? And of course, for retail, we're not fast food, but I'm just thinking about the whole economy here, right? The economy has been, well, at least the economy. Now, when you think about the economy, it's like the small businesses out there, right? If the small business is not thriving, you don't have people who are working on those jobs having the money to do anything right now, right? Including shopping at anywhere, even Ulta Beauty. Ulta Beauty, come on, was down 15% today. Not quite sure why, but that's what I saw. But it must have been, a reaction because of the down, revenue down and whatnot. And so this is why we've been cutting stores, but, adding a few more in places that was needed, Marantz did the video on that one if you want to check them out. But the point is that, the consumer has been pressed on not having enough to, like I said, living situation, rent is higher, water bill is higher, everything is higher, insurance is higher. How can they have money to shop on those discretionary product, right? And the fact that, Gamestop is able to pull out of that, operating in that environment and still come ahead, that is a good thing, right? That's what I'm trying to tell you guys here. Leadership has been doing the right thing, the right time, the right way. Slowly, yes, slowly. It's not going to, to be $1 gazillion tomorrow. But over time, you're gonna see this company is gonna grow much quicker than you might imagine. Because by that time, you probably forgot about this company. Right? You're not going to be paying attention to this company anymore because, again, it's not in the news. Like, by the time it's in the news, it's over for you already. Like, they're not going to cover it when you're supposed to be buying into this company. They're not going to tell you to do that. And so they would much rather bash it now, poop and scoop, right? That's the the strategy on the opposite end, they pump and dump and scoop it, poop and scoop. And so your job is to know when they're pooping and scooping. Because that's usually when you make the most money here in terms of trading, like if you want to trade this company. But that this is why long-term investors usually benefit more in the long run if you pick the right company. Obviously, if this is not a company for you, then don't look into it. Just not pay attention to it. Pay attention to some of the things that they want you to buy into. Let me see. Did I just see some CNBC? If you look at not CNBC, sorry, Yahoo Finance right here. Apple stock, a pretty attractive place to park your money. Apple, okay. I mean, hey, I'm not saying Apple is a terrible company. I just think that it's overinflated already, right? Look, bullish on Target and Walmart. Even though, and of course pushing AI right there, even though retail sales has been down, right? And it's about to be down more. Like the Fed just speak today, I think, and he's saying he's not going to lower the rates anytime soon. So the market expected a June rate cut, but he's not going to do it in June. So what? So now the market's going to keep going up? No, I don't think so. At some point, it's going to, come to roost here. Because again, the market already priced in like 7 rate cuts already, and no rate cut has been announced. So what do you think is going to happen? My opinion, right? My opinion, and other people that I listen to that I agree with. And of course, oil price is creeping up. I just saw $5 a gallon at some stations, right? So it's been creeping up again. $80 a barrel, something like that, on crude oil. So oil could spike up again. So just be prepared for that price increase too. But yeah, with all of that, GME has been, Ryan Cohen, I bet you anything he prepared for this. He knew what the Fed is doing. He knew, again, like he's not going to know day to day, obviously. But I think, in the long-term projection of things, he's running a company based on the economy that he's dealt with, right? He's being handed down to. So the fact that people just focus on the top line revenue and not really looking into the engine of the machine here, I think that's a missed opportunity, to say the least, in my opinion, right? Of course, hey, I'm biased. Do your own research. Don't listen to me. I'm just some random person on YouTube here. Hi, Michael. Thank you for joining. But back to GME. Bargain time, yes. We poop and scoop, yes, true. They poop and scoop. Not we, they, yes. Yeah, it's been a strategy for decades on end, right? And people are just not aware of it. And, people fall praise to these type of things that, these Yahoo Finance people. We know that they're all bought and paid for, right? And who's owned those people? Again, like it's just the general population usually don't think about what those people are doing to, they claim that, we're just, a reporter and we're just reporting on these things. Oh, look, this company is much better than the other company. Oh, look, the fact that minimum wage is raising is because of this and that. Oh, inflation is due to wage increase and all that stuff. Oh, have we forgotten that the Fed has been printing $9 trillion in the freaking, COVID time. And so, and they're pretending that they don't know where the inflation coming from, right? And the reason why the job data is kind of botched is because they don't want the job data to be in the true sense of the word, right? they have to, reversing it, right? What people have been not understanding is that the job data, like the full-time job, are diminishing, okay? While the part-time jobs are spiking, because again, people can't make ends meet here. They need 3 different jobs to just trying to stay afloat. That's not a good economy. Like, I don't care. Like, people are like, oh, look, my stock goes up in price. It's like, well, if you own own stock, yes, great for you, good for you. But, the backbone of America, the backbone of the economy is not there for you. And so this is why you see the revenue, top line revenue of any retail whatsoever coming down, including Apple. Yes, Apple. Like, look at the Apple sales. The phone, Apple phone sale was down, and nobody cared. Oh, look, this is the best place to park your money is Apple. Okay, all right. Good luck. All right, so that's my schmeal or my rant there of the day. So let's see. Let's go back to Jimmy. Yes, let's go back to Jimmy. Now, I know, like, people were kind of asking Marantz about the cash flow stuff during his live stream and all that stuff. So, cash flow negative. Why is it negative? I don't know. I have to find out why. No, they were paying off the account payable, right? Perhaps, again, to kind of loading off of those weights, of the cost of living going up, the cost of doing business going up. So you have to prepare for that, right? So if you have too much of account payable, you're going to weigh down your balance sheets. And, if the price or inflation spike again, you might not be able to mitigate the loss, right? So instead of coming out with a net positive, we might be, going back the other way, because again, the runaway inflation is too much for the businesses that don't grow properly, right? Too much debt, too much everything, too much account payable may weigh down, the balance sheets, the health of the company, the health of the balance sheets. I hope that makes sense. But anyway, so as far as like bankruptcy in 5 years, I don't see that's coming, right? Not at all. How can a company that has a positive earning go bankrupt? No effing way, right? The fact that we have cash on hand to the tune of $1 billion, like really, $1 billion, and people are scoffing at $1 billion for some reason. It's like, it's just $1 billion. They should do something with it. How about we don't do anything with it? How about we just buy marketable security, because the rate is pretty high right now, right? Well, pretty high in relation to everything else, and pretty safe, relatively, right? With the exception of like the implosion of the American way of life, sure. But if the U.S. government goes down, the Treasury bond's going to be imploding as well. And so again, by that time, GME downfall is not your first of your problem, right? It would be everyone's problem. My point is that, it would never happen. I think also too, they're itching for GameStop to make a move here. That's why they want to kind of like, they're so antsy to coaxing Ryan Cohen to give a guidance and all that stuff. It's like, why are they not giving guidance? It's so frustrating. I can't attack them. It's like, hey, this is a wild card here. Just like Marantz was saying, hey, if you buy something with a possibility of doing anything to, again, like my thought is that they have so much stuff. so much opportunity, so many things that they could do, including buying their stock back, right? Remember, we have $100 million in order to do the stock buyback. But my point of view is that I would much rather get a cash dividend than the stock buyback, right? And even a cash dividend too. Why? No, I don't even want a cash dividend. I want them to just leave that cash there for a rainy day. There you go. Because the company doesn't need to, dilute or anything like that. Go into the shareholder and say, hey, I need more money, just like Adam Aarons, right? Every single time. Oh, yeah, I need to sell to the market this much, right? And again, it's always the opportune time, right? When he sell it, he's like waiting to the worst time to sell it to retail, which is why he's doing at the market offering right now. It's like, really? Now you're doing at the market offering? It's like BS, right? BS. In my opinion. Don't come after me, please. Okay, so. But anyway, so that's one possibility there. What I want them to announce, like in the 10K or whatever, the shareholder meeting for GME. What I hope that they would announce is not a stock buyback, but an increase to the stock buyback. Currently we only have 100 million. What if we increase that to 500 million? Again, it doesn't mean that we're going to do it, but we'll increase the allocating that fund to just do the stock buyback if we needed to, right? And I think with just that announcement alone would scare, I'm not saying that it would, but it might scare these people to like, hey, don't mess with us. I could drop $500 million right now on the stock buyback. You think you could drop it down to $20? $20, sorry. $12? $10? You think you're gonna keep it low, or even $5? You think $5 would ever see the daylight? I mean, I can't imagine. $5, 100 million shares dropped. Come on. But yeah, so I think that would at least give them more ammunition to protect themselves when the stock buyback. If the price is so low, like it's stupid low, like that they can't even refuse to even do the stock buyback for themselves, right? But again, like I would much rather the company have that cash on hand to weather the storm, whatever the storm is. And I think it's not the end yet, honestly. The fact that the Fed hasn't moved a finger to lower the rates yet, it just means that the inflation might spike back up, because the official inflation number, it's actually not the real inflation number. That's what people don't realize, is they think that the Fed or the inflation number is a good inflation number. No. I think if you account for inflation the way that they used to in the 80s, 70s, or whatever, or before the 70s, it would be at least, double digit by now. So that's why you see everything, commodity and whatever, goes up in price much faster than your wages, right? And this is where the struggle is that people cannot afford to live, let alone buying stuff that considered discretionary spending, right? And so when middle class don't have the money to spend, this is the economy that you're dealing with right now, right? And that's what the economy that we're dealing with as a company called GME. But even then, through that, we're actually thriving, by cutting down stores and all that stuff. Yes, it's hard to grasp, I know, counterintuitive. How can cutting down stores be a business that's thriving? It's like, okay, well, if you don't understand it, try to understand it in a higher level, of thinking, right? Again, we're in the environment in which we're not supposed to have those stores, right? we're not in a booming economy right now. So therefore, we're not going to have all those stores and come out profitable. Does that make sense? Like, okay. Hopefully that makes sense to people. But anyway, if not, rewind it and listen to it again. Alright, guys. I think that's all I have. I feel like I'm preaching to the choir at the moment. Any opposition? If not, I will just show you this a little bit here. Of course, like people would love to say, GameStop don't even advertise the most whatever Funko Pop is the thing, right? No, they're advertising a whole bunch of stuff. If you want to look at it, right? The deals and clearance and all that stuff, clothing, games. If you want to do a new release right here, they even have a freaking trailer. You could take a look at the new games that you want to play or buy or whatever, right? It's all here. To say that they're not focusing on increasing in sales and all that stuff, that's BS, right? Just a criticism that doesn't have any merit or whatever. Leadership has been doing great in trying to make this company, palatable again, building it brick by brick type thing. So understand it. If you don't understand it, you might not understand the psychology of, GameStop investor here. We're not here to get rich quick tomorrow. Yes, we used to think that way, but we're grown. We're now an investor in this company for a long term. We want to see this company succeed. That's what I'm here for. Right? I'm sure most people who watch this show, Moran shows, are here for the same thing. Right? Yeah. And also too, I'm here to support a CEO who have the foresight to look into the economy and at the very least, make a statement about corporate America, how it is being support a type of business that is there for the working class as well. That you don't have to screw over the little guy in order to make it big, right? To make yourself feel somehow you're on top of the world, right? Why? Like, you're already on top of the world. Be a better leader, right? And make a statement about it. Like, if you see something like being a leader that are freaking gutting people from the inside out in order to make yourself feel better, like, or richer or whatever, like, why? Why do you have to do that? What? You can't make $100 million in 2 seconds? That makes you feel inadequate in some way? Goodness. But anyway, I just never understand that mentality, But this is the billionaires that I support, So this is a good thing. It's a good leader to at least show some sort of support, right? But again, like, people could change. So if Ryan Cohen were to change his tune or doing something stupid, right, in the future, I'll reevaluate my investment, right? So, but anyway, Eileen, thank you for joining. Got all my 51 shares. Yes. Hey, that's Moran's lingo. I don't want to steal it. So, good for you. I myself has also been accumulating 51 shares in my own personal life. Okay, 51 share. Wink, wink. Yeah. But yeah, I've been kind of a bit active on my trading account. I want to. Oh wait. What is today? Oh my goodness. Okay. Whew, I thought I was missing my appointment. My appointment is on Friday. I'm trying to do my taxes. But anyway, go back to... But so what I did was selling some cash. Not some cash. Selling some call and begrudgingly doing that because I need some fun to pay my bill. But yeah, but not at the loss, obviously. But I do it so that I will always come ahead, right? So currently I picked a, let's see, no, $13 strike on a long dated one though. So if it runs, I'm gonna lose my share. I hope it doesn't, but hey, it is what it is. But of course I'm planning to add more as I make more money, which is fine, you know. I don't know if they're gonna run it up or anything like that. It's been kind of a touch and go type thing, right? So I'm hoping that they're gonna keep it down at $13 for quite some time. Just my hope here. But hey, I also have a, you know, my moon back. I have it kind of labeled. So those are my Roth IRA that I've been kind of put in already. So I couldn't touch it if I wanted to. So that's how I want it to be. So that's like my 30 years time horizon. And again, if it rock up to the moon, you know, I don't miss it at all. And so, yeah, that's the risk. That's the risk of you writing a covered call, is that you might get your share recalled. I hope that it doesn't, but hey, it is. I need to pay my bill, so full disclosure. That's why I have my, you know, long-term back, short-term, immediate, you know, a swing trading account, and then also an option one too. Oh, that's another thing too. I just bought some leap call in the future 2 years from now. So let's see if I could see it here. I still have my $17 strike call. So for that previous, I bought it 2 weeks ago, maybe 2 weeks ago. So I still have that one. But if you look at the option chain right here, so I was looking at the leap called here. It's called leap because you have like 2 years, or till this date right here, 2026, okay? And so for me, I pick the $13 call. I bought it at $500 a share, so I'm down, you know, or a contract. So I bought one contract there, and then one at $550. So I bought it like 2 days ago, maybe, like when it was the price was higher. I thought it would have bounced at, you know, $13 or $12. That's why I bought it then. I was like, oh, hey, it's cheap enough, right? But that's the risk. The risk of call option is that, you know, the loss is pretty steep. But I have high hopes for this company. That's why I bought it then. And pretty low to the strike price. So hey, I could lose everything here. So this is why it's very risky. I still have this one. I will lower cost average it down. Of course, very slowly. I still have the 2 call. Currently, I'm down maybe 30%, I think, because I bought it at $500. So, but hey, I have 2 years to wait on this, right? Again, I could technically dollar cost average it down, but I want to wait until it dropped down to 9, if it ever go down to that price point. So I'm waiting. I'm watching patiently, and we'll sell out at some point here for this call here. But hey, I'm speculating here. I think my target is like next earnings report, right? If the next earning report is bad, I might trim it out, you know, cut its loss or something. But hey, I still have, again, 2 years to hold on to that call option. So I'm okay. I don't need that money right now. So if I ever need to pay bills, of course I'm going to sell it and cut a loss. But at the moment, no. I add a few more at $13 here. But if you look at that chain right there, why am I keep clicking on that for some reason? So if you look at that particular max pain right here, $15 for that particular time. Could change at any time. So, alright, hi Bmore, hey Carter, thank you for watching. I have a June $4 put on AMC. Oh wow, I rolled it to at 3 and took some profit. Turned into, oh wow, nice. Cool. My 13 call expired in June. Okay, cool. I mean, again, this is why I don't kind of advocate call option, because it's very risky, and I know that. I've made money before. I've lost money before on GME. On call option on any other stock, not just GME. I used to have SoFi, and again, like not knowing what's going on, not knowing how to read the theta and the beta and all that stuff too. And again, I just go into it because just like anybody else, like learning about it and not or listen to people and not learning about it myself, right? And this is why I developed my own strategy to at least gain some or try to beat the S&P 500, right? Currently not very successful because just like anything else, you lose some, you win some, and all that stuff. But very, very conservative on those type of risks now, right? I used to be a lot more risky because it was like, let me just YOLO on this, right? YOLO. When I say YOLO, it's like a couple of contract here. I don't have much money here, to do those YOLOs. So that's why my option contract is or my option account is very low. I'm not degenerate, so to speak, right? But yeah, that's cool. I used to have a put on AMC, but then I realized, who am I betting against, right? Retail. So that's why I was like, let me not. But hey, if you understand to buy put when you can, and educated about it, and pick the right strike price and the right time, you might make a lot of money doing that. Yeah. It was purely an emotional play for GME. Of course, back then everybody was, and that's why. I was emotional on AMC. I don't know if you know my backstory on AMC. So I got in AMC when it was running. I got lucky because I bought it in May, and then it exploded to 72. I saw 72, did not sell. Of course, I should have, right? But at the time, I did not know. I was just like everybody else. Oh, hedge fund this, hedge fund that, right? Not knowing what I got myself into. Now, I did make a lot of money jumping into that, because at the time, my price target was 36, right? And 36, 46 or something like that, because I was like, hey, if I look at the movie theater and all that stuff, try to make the analysis, a very limited education on the movie business part here, just pure speculation back then. I was like, hey, COVID is over almost, right? That's why I was like looking into buying a stock that the company was closing initially and then reopening, right? So that's the hype right there. And I got in around $14 at the time, and then it went up to 72. Now, at the time, I put all in my Roth IRA in there, right? And I don't remember at what how much I had at the time, but I had a lot, accumulating. A lot for me is very small. I had about $6,000 in my Roth IRA. Again, I'm accumulating years before that. And I was like, oh, let me just all in GME. So I end up with, 5x my money at the time. I was like, I made it, right? But again, and learning about it, didn't sell, and then add some more, along the line. But then I saw the light. I was like, ooh, But also too, I was kind of in stage. I was selling a portion of it. It's like, okay, let me just sell half, right? And that's how I got accumulated to where I am today. But I went all in on GME, after that, after I sold off on AMC because of Adam Aaron, right? Because of the apes. That was the thing that broke the straw that broke the camel's back, so to speak. And that's when I found Moran's channel at that time. He was speaking about, AMC way before that, before the run and all that stuff, and found out that he was telling, the truth about this company. And ever since then, Adam Aaron's action was never to support retail investor, ever, right? And of course, he go on Twitter and pounds on this, what checkmate and choke on that and all that stuff, right? All of that's just fluff. And I saw that, and of course, thanks to Moran's, right? That kind of like give me the I guess a clue to what Ryan Cohen, Adam Aaron is doing, for retail, to retail actually. But yeah, now we all know that AMC and any other place that they're pushing right in front of you that have high short interest are just, again, to steer people away from GME. And again, like, to me, nobody has sold, right? In my opinion anyway, based on the on-balance volume. Like, serious? Like, if people don't see this, it's happening? Like, I don't understand how people say that people are selling left and right. No. People sell here, right there. Right? But not enough. See this price right here? Hold on, let me see. Right there. This is when people panic and sold. Here, let me go back. Okay, let me show you what it's like for OBV to match. So see, this is when people panic and sold. But even then, it's such a low level of, like, this price action does not support the volume that it should ensue after that, right? I bet you anything, if you look at like the IPO, all of the IPO over here, right? Boom, 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 right there. It's like you would have seen a steep drop right there, because that's what happened when people are selling. But this is not indicative of people selling at all, right? And you never ever hit 4 billion mark ever again. Now it's close to 6 billion shares being traded so far. So where are those volume, right? People buying and holding, they're not selling. Now, I bet you anything, these sells are the traders, the people are trading in and out. Right? Option trader, option, people. But yeah, so, I mean, hey, this stock has been very popular among retail. So, and honestly, you could make money anywhere. Like, you do trading. If you understand trading, go ahead, trade it, But as far as like a long-term investment, I feel like it's much better for me anyway, for anyone who wants to build wealth in that sense. But hey, I'm not saying it's not risky. Obviously, you know, putting money all into anything is a terrible thing to do. Make sure you understand what you're getting into, you know, before you accumulate the company and hoping for the best type thing. Might not be enough, right? But again, I have a long time horizon. That's why I accumulate GME right now. It's a high conviction stock for me. Yeah, I'm hoping it's gonna work out for me, right? But this is why I'm only interested in the balance sheets. What is the balance sheet doing, right? Is it healthy, right? Currently, if you look at every indicator out there, there's no signs of bankruptcy here, right? So the only way that this stock would go to zero is bankruptcy, right? There's no looming bankruptcy here, right? In my opinion, anyway. So you know how people say, "Oh, GameStop doesn't pay their bill." Well, if they pay everything, every single account payable, whatever debt that they have right here, total debt, they would still have $600 million in cash. So cash on hand, you know, you still have that. And on top of that, they have increased their working capital. It used to be like under $1 billion. Now they have more money to do whatever they need to do, right? Yeah, cash burn, sure, but quote unquote burn, when they're paying off debt, that's usually a cash burn as well. And on top of that, you have an increase in profit margin, right? Currently, we're up on employee per revenue per employee and profit per employee. So we're on the other side. It used to be like something else, $300 in the minus or something like that, right? Last quarter. Now we're in the plus. Let's see. I know people are like, PE ratio is $600. Okay, we'll look at it now. The lower the price, the better for the PE ratio. And again, so, okay, if you look at this one too, look. Okay, you know how people are like, GameStop only make $6 million in a year. Well, people, come on, really? Are you that naive? Okay, if you look at this one right here, you know, $50 million right there. That one is going to fall off for the next quarter. Now, the only way that they would post another $6 million is if they would lose, what? I don't know, $50 million again. You think they would operate at a loss? $50 million loss? I doubt it. You know, with the store being cut, right? With the fact that now we're in the positive per employee, right? Like, you know, $800 per employee, you know? That makes some dough right there, right? In my opinion. But even if we're coming out flat, the next quarter we're going to be posting $60 million. I'm hoping, right? $60 to $50 million. So if they're posting $50 to $60 million next quarter, what do you think is gonna be the PE ratio then? Right? And the forward PE ratio is gonna be improving from that as well. Yeah, I think we have 2 more years to prove to these people that we're good company here. In my opinion, anyway. I purchased so many shares this week. OBV is supposed to go down if the closing price is lower than the previous day. Yeah, right? Our price closed lower with a high OBV that is a short interest, and day to cover, tells me. Yeah. Yes. And also too, I think they were probably doing some, they call, what is it called? Short ladder attack or whatever, right? It used to be a term that people use all the time. But, what they do is just ping-ponging the share to each other, right? It's like 1 penny at a time. And that's why sometimes when you see like 100,000 order of buy volume, you only see a price tick of 1 cent, right? It's like, what? But stuff like that happens to GME all the time, and usually after hours, pre-market. I bet you anything if you check Robinhood right now. Hold on, let me see. They probably have like that 24 hours market. Let's see. Yeah, right now, like, they're ping-ponging that share, the overnight one. So, yeah, I mean, that's why like buying and holding is the only strategy that would work, right? Warren Buffett also do the same thing, and that's why he never sell the shares that he believed in the company with, right? Because over time, if you have good leadership, good business, right, well-run business that is profitable, you can't go wrong in a decade or so, right? And so that's the accumulation effect, is that, hey, eventually you're going to stack the cash and then hope for the better opportunity. I bet you anything, if you look at Warren Buffett cash position right now, it's probably like to $100 billion or $50 billion, the biggest cash position that he's ever held, because he's expecting a crash, right? And I think he's been holding that for a year or two, not doing anything with it, because again, he's smart. He's like, hey, this is unsustainable. I don't care if Nvidia go to $1,000 right now. I'm not missing anything. I'm already a billionaire. Why wait? Why rush into doing something stupid and lose, my fortune doing that, right? But again, hey, that's how people, rich people, when I say rich people. Anyway, I'm just ranting, sorry. Alright guys, thank you so much, Carter, for that interaction. Yeah, sounds like you're very knowledgeable about all of that too, so I appreciate you watching. Alright guys, that's all I have. Thank you, Michael. Thank you, everybody. Thank you, Leno. Thank you, Lynn, for getting in. And you're gonna get your price target. I hope you do, Leno. $10. Sure. Alright. We could do that, sure. But anyway, hey, we're in a good company. Everybody's telling you to sell. So, but yeah, do your own research. If you just got in here, want to look into what GameStop is all about, I would suggest just learn to read the balance sheets. Please do that, and don't read the headline, or have a CPA that you trust, that to look at it for you. Yeah, you might learn something here. It's like, hey, is this a terrible company that people think it is, or whatever, right? Because when you look at the analysis, or the analysts out there, they're not going to tell you the truth about this company. So right now they're telling you it should be at $5.6 right now. $5.60. Ridiculous, right? Ridiculous. Anyway, whatever. Let them think that. Alright, that's all I have.